Good morning, YouTube. Hey, how you doing? I'm Grady on the charts. And today is Thursday, April 17th. And we're going to have a short week this week. So today we're going to go ahead and take a look at the charts. Historically, I heard that there was some data that suggests that we're going to have a very good day today. But I think that we're going to have a good day if we trade if we trade the market properly, take our time, we're patient, and we allow that patience to pay off in profit, right? We got to go through the pain of patience for it to pay off in profit. Yesterday, well, let's go ahead and take a look at the news real quick. This morning we had building permits and housing starts come out, and the building permits we were up over the 1.4 million forecast to 1.428, and then on the 1.42 forecast for housing starts we were at 1.324. We don't have any news for tomorrow. Tomorrow's Good Friday, so we'll be back probably on Monday. Although I don't see any news here for Monday or Tuesday, we pick right back up on the news next week or there on April 23rd. So the market is just about ready to open. It is 9:30 and the market is open. Be safe. Remember, you're trading at your own risk. This is this is trading entertainment. So I hope you guys enjoy. And yesterday, if you guys were with me yesterday, you saw that I exited the market kind of early yesterday. I um I went ahead and got out, took my you know, took my licks like a man. And this is the area where I got out. Right here. I left the market right there. I said, "No, I'm not trading anymore today." And right here where my finger is swelling on this 15-minute chart, that's where I got out as I missed this short all the way to the downside. And I just decided to, get out early and enjoy the rest of my day. We traded into this imbalance right here on the 5-minute chart just before the pre-market open. Then we dropped down on the 5-minute chart. We just rose to the high, to the close of this price here. And I'm a little eager to get involved with today's market, you know, because of that massive trade that I missed yesterday. But I did not sell right there, although I saw that we started the initial breakdown here, and now we're sliding. And if I got another entry, I'd be very surprised if it actually gave me an opportunity to get in. Because I looked at it and then it just said, no, I'm gone. 19 seconds left in the first minute. I thought about sitting today out completely and then just coming back next week. What I mean by sitting today out, I thought about not doing the live stream and just, trading by myself, taking my time, chilling, and coming back tomorrow or coming back on Monday and then looking at the market and going at it again. But no, I decided to go ahead and hop on. And again, as I'm looking at the market just break down here, I am very concerned that um we're gonna run to the take out this low uh fairly soon here. I want to see how far up this candle's going to go. Man, I was more comfortable with this short at 18,509 immediately off the open. Everything in the pre-market set up, excuse me, set up very nicely. We had news, we had displacement to the upside. We took out a lot of liquidity with these pushes to the upside. Then right prior to the open, we ran into this gap. We closed on the 5-minute chart. We just turned over and broke down. So, eesh, I um, I let it get away from me, and I saw it. Right, I saw it. So I wasn't really mm, caught unaware. It's just I wanted to do all of my preliminary evaluation before I took the entry. Even if I missed that great opportunity, I wanted to look at it one more time before I jumped in instead of just saying, "Oh, market open, click," right? Because a lot of times there's volatility at the very opening of the market, so I didn't want to get involved with that, right? Any late news price fluctuations, right? Mm. 1 minute left in the first five. Mm. Mm. If I could explain to you how I wake up at 6 in the morning, I do a little bit of a morning routine. I'm all over the house. I'm doing all these different things, and I never yawn once. I never yawn once. I sit down, I turn on the microphone, and I begin to speak, and I'm just I just can't, and it's like it was crazy. 24 seconds to the close of the first 5 minute candle. My suggestion is the first gap of the day would be right there. Boom, 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 boom. Mm. Wow. Today is the last day of the trading week, and I was wondering about today's low, the low that we put in yesterday, whether or not that was going to be secure enough to hold for the close of the week. I was looking at Monday's high. Monday's high represented the high of this week. Wednesday's low, which was yesterday made the low of the week, and then we rebounded from that low to our current price. So on the daily chart, we were just a few ticks within the opening price for today, just a few ticks within the opening price for today. So I'm very curious to see how the week decides to close out. Since it's a short week and we're going to close it out today, are we going to decide to run today's low? Yesterday's low? Or are we going to move higher and challenge the opening price and the high of the week, which is near Monday's price? So that's the I guess the curiosity that I have for today. 3 minutes and 10 seconds left in the 5 minute candle. So that's the curiosity that I have for today. At 3 minutes and 10 seconds on the 1 minute chart, we put in this one up close candle here. That represents just that small, slight area of bullishness that's created the bullish body of this 5 minute candle. If it served as a 5 minute fair value gap or a 5 minute, breakaway gap or measuring gap, whichever gap that it would be, institutional order flow entry drill. I would need this candle to close bullish, and then the next candle just to run the high of this candle, and the high of this candle is here. So on my 1 minute, I'm looking around this area because this is extremely high in this imbalance on the 5 minute, unless this candle closes and gives us a tighter a tighter gap. But again, if it's breakaway, then we won't see us close in this gap as much as we would expect. Mm-mm-mm. Today has been a growth week for me. It has been a growth week for me. This completes our second week of live streaming here on YouTube. And the reason the way when I strangely enough passed my um passed the combine 2 weeks ago, and I believe in the first week of my live stream I blew that account live on stream Or was I off stream and I blew it? I think I may have been off stream and I blew the account. And it's one of those things of accountability that a lot of times we as traders don't necessarily have if we trade at home by ourselves, and not in front of anybody. If we were at a business sitting in an office and we had a manager and someone who stood over our shoulder and asked us at the end of the day or asked us at lunch about our morning activity or why we decided to do things, then we would have to answer that person, right? We'd have to come up with some sort of a response to the uh the nature of our behavior as to why and I'm sure that they would ask why did you do this and why did you do that? Now see how this gap is extremely low. This 5 minute candle is extremely low with this expanse of price action. Price has expanded from this point all the way to here. And so they would ask us why? Why did we decide to do this? Or why do we what is our, what's our game plan? What's our playbook? Why are we doing this and that? And I think that so for those of us who are either brave enough or crazy enough to trade live on the internet, when we do this, it's basically it's a very evident thing as to our thought processes and why we decide to do something. Because what I'm not gonna do is I do not ever intend to be a extremely terrible example, right? If you guys watch this in the future, or if I watch this in the future, I don't want to look at it and say, man, this is ridiculous, right? Although there's no one who could ever gain experience in the market and years later look back and say, oh yeah, day one I was trading perfect. And if you're trying to tell people that, then I think that that's a major issue. It's a growing process. It's a growing process. One of the things that I'm uh not curious about or not struggling with, but I am aiming toward is when I started trading, because I started trading micros because I felt like I understood the ICT concepts extremely well. And over time, I realized that the concepts have to be, they work. They have to be um, adhered to a certain degree of vigorousness or vigilance. You really have to be on it. Now, see, we just ran the high of this. If this is a breakaway gap, I would not expect us to get up here to where I thought I saw this first imbalance. So the first imbalance that I saw was here, right? For the 1 minute there. And so here, as we move back into this gap, I'm thinking to myself, should I take a little bit, put up on a little bit of risk? There we are. That's that first presentation gap. And I'm thinking, should I put on some risk? I'm going to put the risk and I'm going to put a stop loss here. And then I am going to go to my settings and I am going to remove the executions from all the screens. Um, so yeah. So when I see traders who are more experienced and have been profitable for longer than I have. And in this regard, in this particular trade, they would enter with multiple contracts, 3 contracts, 5 contracts, 10 contracts, micros. Or like ICT himself, he would enter a trade multiple times with, entering with 4 minis and then another 4 minis and then 2 more minis, right? To get to a total of 10 mini contracts in a trade. So in a trade like this, I am really kind of seeking for the clarity, consistency to say, oh yes, I know exactly when to add. This trade, I'm watching it as I believe it may or may not play out. Why do I say may or may not? Because this was the first leg to the downside, and we did this yesterday to watch as price would drop down into imbalance or drop into an order block or something from the prior day that would be the reason why price would fall, right? Pop, pop, pop. That would be the reason why price would fall, right? Um, so yeah, there's that, right? Um, so just dealing with levels of confidence or dealing with um higher levels of risk, right? Without and then approaching it in a way that's responsible, right? Approaching it in a way uh that's calculated. You see the small imbalance right here that we created right there? You see this? You see that right? That little small little gap right there? Right here, right here. I am watching this small little gap to see whether or not it fails. So to be to approach um um opening up risk and taking on more risk in a responsible, see where we close? Okay, let's watch where we're closing. Let's watch where we're closing. We're also watching to see how this 5 minute candle reacts to the prior two. In the past, one of the things that kept me unprofitable for longer was having 2 or 3 days where price went my way. Let's see how we react. We need this 5 minute candle to be very agreeable. Right now, we've traded down into the body of this, to the wick of the fire of the prior 5 minute candle. Overall, one of the issues that I saw in the past is I could see in a gap or an imbalance just like this, and I would take it to mean that price was going down. But it doesn't necessarily mean that because price could gap down to an order block. We could expand multiple down close candles just like this to an order block. So I'm waiting for this 5 minute candle to close below this 5 minute candle, the retest of this up close candle, and then the delivery to the downside. But my entry is here because we see how as soon as we got to that lower time frame or that first presentation gap, that we reacted to it immediately and price moved away from it immediately. Strangely enough, I didn't feel any anxiety as price moved back toward this gap. Although, as soon as price opened here and we were here in the morning, I said, "Dang it, I should have went short." As price moves back against us, sometimes those are the areas where we become the most excited. Now we are approaching the middle of this 5 minute candle, and price just took out the prior lows here, right? Just took out these prior lows. So what does that mean? So if there are stops down there, that could fuel the move back to the upside. So I am not, so I'm not eager to do anything at this time. Right now, I think I'm going to move my stop loss down to the premium of this fair value gap because I want to minimize any drawdown or any loss that I might have today. Uh, because we've moved away from my entry and then down below this level, it gives me a small level of confidence to think one thing, right? One thing I want to say is this is the closing price of the five. So I'm gonna call that my F5 MC. That's a 5 minute close. And when I say that that's a 5 minute close, I'm referring to a 5 minute up close. The high of the wick is here. It's a lengthy wick, so I would not want to see us trade above the high of this wick into this gap. That's to me, it seems like a lengthy wick on the 5 minute chart. And so I wouldn't want to see price trade up all the way up the body of this. I mean, up the length of the wick to take take the high of the wick. But price is not moving down right now. Price isn't moving down. We just dropped down below these lows. It is 948, and then price is turning over, and it seems to be coming back against us. So you're saying this. You're saying, say, Grady, why don't you um add here, right? Why don't you add here? Man, I would love to, as we just turned and came right back into the 5 minute close. But I'm not going to. Number one, the reason that I'm not going to is because of the drawdown that I created for myself last week. Because of the drawdown I created last week, and we've been trading low risk in order to reduce that drawdown and return to profit. That's down. We're down 9. You see what I mean about the length of this wick? 8 seconds left in the 5 minute candle, and then we're gonna close where? Way up here. 5, 2, 1. Nah, something about that is awkward. That's awkward. There's a nice gap on the 5 minute chart. There's a nice imbalance here. We closed. We put a wick here. Immediately rejected. We entered. We dropped down. We ran down and took the lows out below this level. Now we're here, flirting with going higher, right around 9:50 a.m. Doggone it, buddy. That's terrible. All right. So now, boom. That's consequent encroachment of that first presentation fair value gap. My stop loss is, and it hit my stop loss. That's not good to me. Well, for me, there's no way to know whether or not it's going to be a day that trends one direction. And if I do not get involved early, then it's going to run without me for the rest of the day. Because again, it is Friday. I mean, sorry, it is Thursday, the last day of this week. However, this week's range is odd compared to the range of the previous weeks. So, yeah. So it's just one of those ideas of did we just drop down all week so that we could turn over, pop up, and run higher, right? Yeah, so it's one of those things. Okay, so we traded to the high of that level. 952. We dropped down below consequent encroachment of this first gap. It seems significant now because we definitely traded to the low. We're in the premium. We turned over, dropped, and hit the discount. Now we're trading to the high of this gap. I'm going to a higher time frame. I'd like to see what we're dealing with again on this higher time frame. 7 minutes left. We traded here. We dropped back in. We went all the way down here. There is an imbalance on the higher time frame here. We're not closing in it. We just put a wick way down here. Let's go to the 30 minute chart. Mm. And the reason I say is because I'm looking at this imbalance. We traded all the way up above this level, turned over, dropped back in. And this is a 30 minute chart. Showed up. Yep. Market structure. Bring up the high this level. Move up, move up, move up. Trade it here. Drop back in, drop down. Oh, yeah. Pull forward. Mm-hmm. Still early in the day. Mm-hmm. We redid all of this to get back up here to this up close area. I mean, to this, yeah, to this up close range. Traded into the up close range. Broke down below this level. Down here lower. News. Traded up to this highs. Hit that level. Rejected it violently. Turn over. Drop in the weekend. 5 minutes before this down close candle is beginning to close, we drop all the way down. And then in the last 5 minutes of this 30-minute candle, we pull all the way back up to here. So you can move that. One of the main reasons why, although on the 5 minute candle, it looked as if I could get short here and I could add here. The areas that I thought about adding would have been here, and then price would have gone against me, taking me out, and adding in my risk. And that's one of the reasons why now, especially at times like this, where like in the last few days, I've had several good trades, but most of the trades that I've taken in the last few days have that not followed through. I haven't seen forget a day or a time point or time frame where price just follows through for us and continues in that particular direction. Here at 9:55 a.m., we've made a run to this level. Does that mean we're running back to this pre-market imbalance, to this one? It's hard to say. We ran up here, we put a wicks here, these up close bodies respecting these two up close candles. This candle is going to tell us what it all means. We just drop back into consequent encroachment of what appeared to be the first fair presentation fair value gap. First presentation fair value gap. Um, Now we just traded off the inside high of that level and we've begun to move back to the downside. So did we enter this gap at 10 a.m., right? It's 9:56. We're still in the macro, 6 minutes into the macro. Mm, it's okay. It's okay. And the reason I'm saying that it's okay is I was just sitting here, and I was thinking about how difficult it seems to be to find my way into these trades right now. And what I was saying to myself about it being okay is that as this entire week has been extremely suspicious, right? There hasn't been any trade confirmation signal that was not um, ran out at a later point in time, to some degree. 21 seconds. 2 minutes left in this 5 minute candle. We ran and we just touched the high of this up close candle. I want to see a move back up toward this direction. Just one push back up on the 1 minute chart. Not on the not on 30 second, on the 1 minute. A 1 minute and 54 seconds left in this candle. Mm, Come on, give me 18481, please. 9:59. Last minute of this 5 minute candle. Mm. Mhm. Yeah, yeah. 4 seconds left in the 5 minute candle. And then we pushed up here and we closed. I think this is confusing and in the way. Move off the consequent encroachment of this gap. Straight up to it, wick above, drop down. Is that 18,481 level I was looking for? Hmm. Not long. I'm looking at this up close candle to see what we're gonna do with the body of this candle. Small little gap right there. Pull that forward on on the 15-second chart. Here, there. Pull that forward. Mhm. I must be some type of a contrarian trader. Must be. Okay. You see how we failed right here? We came right here and we stopped. That's what I'm watching the lower time frame. I'm just like, oh, because it has this sort of a, you know, what I would need is I would need this candle to get down below this tiny little 15-second candle cluster and then continue. 10:03 a.m. Dropping down, just watching this imbalance again. Just watching this area one more time. Remembering that we have this 5 minute close here. This is a decent amount of points. This is 50 points right there. 50-point move. It could come against us again, right? I really would not feel any comfort, if that's a word that we could use while trading. But I wouldn't feel any comfort about this trade until we got down past these relative equal highs. But this level has been extremely powerful for us this week. What do y'all think about me taking this scalp here? Right? Just taking a scalp and taking that home with me this week. Just to put a win on my board. I'm gonna scalp this out. Oh, I'm not gonna scalp this out. I'm not gonna do myself like I did myself yesterday. And not again today. I took a small loss before, and I put myself in a position not to take a loss right now. If it drops down into this gap, and this gap is the more powerful of the gaps, that's not the first presentation, but this one, then look, it is what it is. I know that that level above was like the first imbalanced form of the day. And if it's invalidated by this lower gap, then it is. We traded down to the low of it. We tapped it one time. Now we're struggling in the premium of it, and it looks like we're just going to reverse right here. So I'm just gonna bump the edges of this imbalance up, so I can just look at it a little bit closer. And that's that. That's that. Because it's been plenty of times that I've seen my first presentation fair value gap or first imbalance of the day send price every direction, right? We'll go above it and then below it and then above it and then below it and then above it and then below it all day. And then we won't really get the delivery of it until after lunch. Then we'll finally trade to it. And once we touch it again after lunch, then we'll have that sort of a delivery of the day. And the only thing that would truly upset me is if I trade the short leg today. What I mean is that twice today I traded opposite of the main trend. Like this leg, I wanted that one, and then I wanted this, and this is a little short leg, and then we'll move to the upside, uh, 5, 10x what we move to the downside. That's 3 minutes left in this 5 minute candle. I didn't like that. Didn't like that. What's the news? What's the news, everybody? So many new news. What's the news? What's the news? Where's the news? When price breaks like that, I think something happened or someone said something that I'm not aware of. All right, what's going on? What's going on in the market? Price just broke to the downside violently, and that impulse makes me believe that we are going to um okay. I just checked CNBC very quickly to see if there was any news that I wasn't aware of. Just that sudden fall to the downside, you know, really got my attention. That really got my attention. So let's see what we're dealing with. We're back in this area again. And just like we saw yesterday, sometimes these low areas are just areas where price is going to gravitate toward and sit. I like the way that price decided to drop into this range, but I don't like the idea that we did so quickly that it could possibly set us up for We consolidated. Let's run to terminus. Boom, drop the terminus rapidly. We had to get there real quick because we're on our way somewhere else. All right. So this is a decent delivery for today. Are we thinking 17,982, or are we looking more along the lines of 18,224, or are we looking along the lines of price stopping here and then reversing off of the 15-minute close of the prior down close candle, right? Interesting. We saw this yesterday. We came into a low, and it looked as just like it does here, like a swing low, because we have a low here, a lower low, and a higher low, and that would be the perfect element that would represent the definition of a swing low. We don't have continuation, which has plagued us this week. Yesterday, it wore me down to the point where I exited just prior to beautiful delivery to the downside. And it seems as if they're going to run this playbook for a while. They don't want most traders to be a part of the larger moves, and so they're gonna wear us down. They're gonna continue to run this playbook of back and forth price action, knowing that we're gonna run our stops tighter, right? The more we have this back and forth price action, we're gonna run our stops tighter and tighter because we want to mitigate the risk as much as possible, which gives them the opportunity to then tighten up price and then open up price, tighten up price and open up price. And as we tighten up the price and we run our stops tighter, then they open up the price. Then they open up the price. It's easier to stop us out because we're trailing our stops right behind because we don't expect or we don't um yeah, we don't expect price to really just play out. We're trying to give it time to do what it needs to do, but they're bringing price against us again, again and again and again and again and again. So as we're looking at the 5 minute chart, what we would normally see or what we could possibly see in price action is gaps. Move down, hit the gap, move down, create a gap, candle, down close candle, move away, right? So it's just one of these things where it's not giving us any directional movement in our market. Like during the London session, or sorry, during the opening session of the New York, blah, 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 blah. However, we look at PM session, major delivery. We look at the Asian session, consolidation until a nice, strong, one directional move into London. London was practically a consolidation. And then after London, consecutive movement in one direction, a retracement, a move down, a close below that prior close, a run. Uh, we turn and run back into the into the low of these up close candles. Then we drop down, we close, but do we close below this down close candle on the 5 minute chart? No, we come in very close to that closure. We go run down into its wicks, and now we've turned over. What we would need is we would need in the London session. What we would need here in New York is we would need price to continue in one direction at least one day this week in the morning session. Every morning session this week has been plagued. That's the word. Oh man, that's the word. Has been plagued with Extended wicks, back and forth price action, consolidation, barcoding. And so here we are Thursday morning, and we're looking for price to begin to be, to loosen up and be a little bit more lubricated. But no, it seems like we may or may not get that. We're looking for this 5 minute candle to close below this level here that I have set up as the 5 MC, 5 minute close. Come on, Big D. 26 seconds, 25 seconds. Ah, and it's not that it's not, it's almost as if I am stressing over this, and to a certain degree I am, but it's just that I feel targeted when they'll give the Asian session and London session clean price action and clean movement, and then we'll come into London. Where do I live? And then we'll come into the New York session and have difficulty, right? Have difficulty even finding our way into the price because it's just back and forth. And I'm thinking to myself, well, maybe I should wake up at 2 in the morning, 3 in the morning, turn on my charts, trade London, and go to bed, right? Go to bed in New York. It's a slight close below that prior down close candle, and then a slight like pop up. And I am losing. No, I'm gonna say it. I'm gonna say it. I'm losing my patience with this, right? I'm losing my patience with this. It's coming down here to a point where I want to say yes, right? I want to. And so that's a me problem. Sorry, that's a me problem. I need to chill. It's going to do what it's going to do. And we're going to do what we are supposed to do, right? We saw the mentorship, right? We saw risk mitigation. We saw um, dealing with drawdown videos, right? We saw entry and exit models. We know as the technician what we need to do. We need to find the best possible entry we can get into, and then we need to sit back and let time do the heavy lifting. I see now, but the issue is I see so much back and forth price. On the 1 minute, it looks a lot better. It looks like price is breaking down and failing. But you know what I saw the other day that I how would I put it? I saw this the other day, and I saw this trading model, and it's one of the things that really surprised me about. See how prices stopped right there, and here are the lows. Here are the low closes on the lower time frame, right? So we just run right to the close of this price, and but I saw this the other day. I want to keep my train of thought. Hold on a second. Retracement to the close of that retracement to the opening price of the prior 5 minute candle, prior 15 minute opening price. Just tapped it once. So I saw price do this one time. Okay. And I'm gonna draw this out very quickly. There was a run up, move down, and then a stair step run up above a previous high, and then a fall. And I know you can't see this. I know you can't see this. I know you can't see this. And it looks like the scribblings of a art a creative genius. That's what it looks like. My lens dirty or something? Because it's going crazy right now. I think it's pissed from what I just did. It's pissed. It's pissed. It's going crazy. Let's stop that. Stop. Yeah, it's pissed. I pissed it off. It's not gonna stop doing it. All right, cool. I got you. I got you. I got you. I got you. I just need you to be right there. Yeah, I pissed it off. Yeah, that's what happens when you purchase inexpensive lenses online. They don't really respond to your cameras well. All right, so we have hit the relative equal. We've been at this level multiple times in the last few weeks. This is probably a very, very sensitive area for price. Anything could happen here. We were able to pull in, um, we were able to just to sit in for 100 points. That's 100 points. This is little, almost 110 points from our entry. Once we got down to this level, what I really wanted to see is I wanted to see price drop down, break down, break down, and then once we got to this level, I wanted to see that higher time frame displacement, right? The higher time frame price distribution. Yep. Uh, what I was also concerned about, and this is what I wrote, this is what I was writing about, was how sometimes we could go to the 50% level of the range, 60%, 62%, the 79%, 87% level, 100%, and then run higher. So it's like an optimal trade, but in reverse and backwards, and it would be based on this range. So we would just stair step all the way up through this range, stair step, stair step, stair step, and then we get to a particular point, and then price would just kind of reverse on us. So that's I've, to me, you'll see it if you ever, if you continue to trade, you'll see it and you'll think, oh yeah, I'm gonna go short here. I'm gonna get short here. I'll get short here. I'll get short here, and then price gets to one of these higher time frame levels. You see how the price closed on it exactly? That has my antenna, right? It has me zeroed in on the way price is gonna act, and I'm looking, and I should be looking here on the lowest time frame. So down close candle, we close above, and then we started going back in the opposite direction. Mm, what are we doing here? What are we doing? What are we doing? Moving my stop loss down. That's all I'm gonna do. We priced through all of this stuff. All right. So this is what I tried to draw on the piece of paper, right? Let's move down, a move up, and then this sort of stair step down this long leg. And then once we took out the lows, we turn over and then right? We just go back the other direction extremely violently. Now, I'm not making a prediction. I don't want to see that. Is that's my concern that I'm going to see, right? That is my concern. The next thing that I want to see on this beautiful Thursday morning is finally a close below this level that represented the relative equal highs for Monday and Tuesday of last week. Was that this week? The last week? Was that this week? That was last week. Was that this week? That was last week. Monday and Tuesday of last week. And look, we're really struggling to even to do it. We're struggling to get through. This to me says, hey, Greg, your patience is decent. That was a decent amount of patience. That was a decent amount of patience. Impress yourself today. Be more patient. Impress yourself with your level of patience. Impress yourself with your level of focus. All right. Don't do anything. Don't, yeah. Impress yourself. Watch it happen. Watch it deliver. Be mindful of the rules and regulations. Watch it, watch it, watch it, watch it, watch it, watch it, watch it. Go. Hmm. Remember this is a 15-second chart. So that's a 15-second chart. But as soon as we broke down below that level, we retested. Let's see if we come back through. Because we touched it once and came back through and ran higher. This would be our second time touching it. Now we're going to see if we're going to have sensitivity in this area and then begin to move back and forth. Now remember, to our left on the 15-minute chart, we're coming into lows that we need to keep in mind because these would be some of our price targets. We'll keep this in mind. These could be our price targets. Here, nope, not you. This could be a price target this low. This could be a take profit here. And then between this level and this level, we have this gap, not guaranteed to even go down there. Because look where we are with these relative equal highs. When we moved above that before, we went down into it once, approached it, wait, we touched, we created it, we touched it here, went through it again, near, through it again, near, through it again, near, and then we moved away. We're back, and either we're going to do this straight up and then distribute, or we're just going to drop down in here, say hello to the gap, sweep these lows, take liquidity out below this area. Then if that's the case, then we need to say this is going to be a small winning week. Well, it's going to be, I don't know. Is it small winning week? I didn't even do the math. I would need to look at my, I would need to look at, my top step, my top step to see exactly how we traded this week because, um, yeah, yeah. Now we touched that level to the tick, touched it to the tick. These are full-bodied higher time frame candles, right? What that could possibly represent is more or less possibility for deeper, longer movement. We've closed below that level on the 5. Many of this price action are just overlapping wicks, all overlapping, small expansions, not really, not really opening up. As price begins to accelerate, then, the candles stretch out and there's spaces and gaps and imbalances. Very organized, very tight price action. This is the first extended candle we have on the 1 minute. As price begins to open up to the downside. We're holding. I moved my stop loss down. Why? Because look how long we've sat here and traded, right? We're gonna add a little bit to that stop loss to reward ourselves in the event price does anything unruly and turns on us. We're gonna reward ourselves for sitting in price this long. All right. So the drawdown over the last day or two, we've been able to mitigate that as well as the miss that we had this morning. So it was roughly about 200 and something dollars that we had an issue with. Now, remember these green lines that we set up here? This area below those relative equal highs. What we want to see is what? We want to see us drop down into this gap and play around in here. Nope. Nope. We want to see us go into the gap, consequent encroachment, just fall to consequent encroachment. We want to see it just say, oh, this is consequent encroachment of this gap. Then we want to say, well, what about the premium of this gap? Do we like the premium? And we want the price to say, no, we don't like the premium. Let's see the discount. Then we want to say, oh, this discount is cool. Then we'll say, how about discount high? Discount high is great. I bet you discount low is better. Then we want to see it go hit discount low. Then after that, we want to see what? We want to see price say, if discount low is this good, what happens if we leave this gap? How would that be? That's exactly what we want to see. We want to see now, you see how we're sitting in premium high of the imbalance? We're sitting here like, I love it. I don't like that. I don't like that. I don't want you to enjoy premium high, right? So if we could imagine, we don't have to because I'll draw it out. We don't have to imagine. If it gives me time, I would draw it out from this high to this low, and then we would create quarter levels representing the division between premium high and premium low. We are at the low of premium high of what I call the intermission, and it says, I want to see what the high of this gap is like. Man, please. But this is the prime area to take profit. Prime area to take profit. Um, because of the way that we took out those prior lows. Now it says I want to see what premium low is like. Go ahead, explore. Be free. Be free. Explore. Go. Go. Be free. Explore. Go. Okay. 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 Now it's like this is consequent encroachment. Price is like this is consequent encroachment. And it's like, okay, let's see what premium high is like. What's the difference between consequent encroachment and discount high? It's like discount high. I don't like discount high. I want to see, let's go. I want to see what discount, I want to see what discount high is like. Now we're in discount high. Now, for all of us who are fist pumping and hand clapping and all this kind of stuff, we have to be very, very careful now because we are coming into a very significant area. We're at the low of that imbalance. We're in the lower area of that imbalance. All we need to do on the higher time frame is wick these areas, close, and then move higher, right? So there are 3 minutes and 50 something seconds left here. I've moved my stop loss down considerably. I'm very happy with everything below this level and this price. And it is, you know what? I have an idea. I have an idea. Bad idea, but I have an idea. I'm going to do nothing. What? What? What are you talking about? What are you talking about, Grady? We just dropped down here. You got $340 sitting on the screen. Don't you want to, shouldn't you take that, close the week out and go home happy? You know what? I'm not going to be greedy. I'm taking $319. I want to start over again next week. And I am going to give, you know what? I'm going to give the market back just a little bit. I'm let the market have some back. I'm let the market have some back. Because I want to see where this 5 minute candle closes. I want to see where this 5 minute candle closes. There's 17 seconds left in this 1 minute candle. It's a 1 minute pullback. And I want to see whether or not we're going to open up and move back down to the wicks of this candle, down below consequent encroachment of this gap. I was concerned about not being able to find my way into price. We were able to find our way in. Does that mean that we want to immediately get out? Or does that mean that we are just retesting that the intermission between premium high and premium low? If price is spooling in one direction, do I want to see any minor pullback and completely bail out of the trade? Or do I believe that we can hold on a little bit longer? I do realize that we are in a gap on the higher time frame. That is extremely concerning to me. I cannot ignore that. I just need to see though, I need to see how price is going to react and respond in this level because we consolidated all through this range and then we expanded. What I want to see is a higher time frame breakaway gap on the 15-minute chart. That's crazy. That would be crazy. We have 1 minute left in this 5 minute candle. There's a lot of wick on the bottom of this candle. We may give a bit of money back to the market today, but we might patiently wait and see a greater distribution of price, and then we would say, I see what we're doing here. We're not allowing that that animal brain instinct to make decisions. We're leveraging the alertness that comes from that aspect of ourselves. I was watching this on the 15-second chart. See if we go down below that level. It looked like we wanted to fail here on the 15 second, but it doesn't, it's not confirmed. 3 seconds left in the 5 minute candle. The last 10 seconds of the 5 minute candle are very important. Are we going down from this point? If we run this wick, then we're doing very, very bad in the market. The market is going down, but we've been doing very, very good today's trade as a trader. We're at the high of the down close hourly candle. We are really at the opening price of that down close hourly candle. We are at consequent encroachment. Watching this 15-second chart, we just put a tick right to consequent encroachment. And it seems as if we're struggling to decide whether or not we're going to move lower or whether or not we're going to stop here. For me, I'm thinking the exact same thing that the market is thinking. Stop here or continue. It's 10:38 a.m. I can go ahead and lock this one in. This is a very good. How many points are we sitting at right now? 192 pointer, 170 pointer, 180 pointer. We're at consequent encroachment leg gap sitting still. Stop drinking all that coffee. Maybe you'll relax, buddy. I know. Mm. Mm-hmm. Mm-hmm. We move below consequent encroachment one more time. Is this just a retest or of the discount high in price? Is price just questioning, is it surveying? Okay. Watching the 15-second chart. Because I really want to see in the to like, not to the second, but I really want to see what are we doing here in this small 15-second imbalance. We are in a very nice area. Whoa, whoa, I don't like that. I'm out. You see how price is starting to flash back and forth? We flashed and then we flashed back to the upside. Is there news coming out? What's happening? What's happening? All right, that's enough for me. That's enough for me. That's all I needed to see for do it. Do it. Yes, 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 yes. Come on. That's nice. That's very nice. That's very nice. We approached the intermission and discount low. That's intermission discount low. Okay. All right. Um, I don't know what to do. I don't know what to do because my first thought process is great to lock this in. Lock this in and go ahead and call this week done. And that's what I'm going to do. 388, 390, 388, 379. I'm done for this week. The market is probably going to continue to go lower for the rest of the day. I am out. Um, because I had particular goals that I needed to accomplish before I can get greedy. Before I can sit back and just let the market go and trend in one direction like I'm supposed to, I need to go ahead and lock in a few things. Um, remember, I need to get back above 100,000, right? I need to get back above 100,000. And so I am $600 shy of 100,000. Which was pretty good. I think the trade earlier this week that we hit brought us within $600 of 100,000. And then I need to get back above 100,000. When I get back above 100,000, What I want to do is I want to begin to trade two micro contracts. Once we trade two micro contracts successfully for a while, then I want to work my way. I want to work my way back to confidence to trade. Price is still going down. Yes, I see that. Actually, what I could probably do is go back into the market um, with two micros right now. Throw in two micros and watch that thing fall for the rest of the day. But I'm not. I'm done. I want to enjoy this time off, enjoy the weekend. You should enjoy your time off, enjoy your weekend. Be patient. Manage your greed, manage your FOMO. Um, trade safely. Let's see here. I have other things to say. Prices turned around and now it's kind of reacting to these levels. But I know that we're in that higher time frame imbalance, and I believe that what I'm expecting to see is I'm expecting to see price go back and forth through that imbalance in order to calculate what the fair value would be. Um, I don't want to see this. I don't want to look at that right now. I don't want to look at it. I don't want to look at that. Shut that down. I have to. I have to. All right. Run the disclosure. Guys, trading is risky. All right. So trade at your own risk. Proper education will take you a long way. Go ahead and run over to the Inner Circle Trader right here on YouTube, and you'll see where I learned what I learned. If you look at any other trading strategy on the internet, then you're going to say to yourself, "Hey, there's a lot of ways. There are a lot of ways to trade, and there are." And some of them you're going to gravitate to, others you're going to shy away from. And me personally, I like the SMT strategies, right? Because they have a playbook, they have a roadmap for you to follow through every moment of trading, and every system is backed with a security system. So if I am bullish, then there are ways for me to look in the opposite direction to say, oh, look, these are the PD arrays that I think that we're going to take out in order for us to be profitable. Um, have a good weekend. Be patient and don't let that greed get you. Don't let the greed get you. Sometimes enough is enough. If you worked a job and in 8 hours, in an hour, they gave you $400 an hour, working 8 hours would be a very smart thing to do. But if they said, "Hey, look, we're gonna give you $400 an hour. If you work an hour, we'll give you 400. If you work two, we'll give you 500. If you work three, we'll take 300." Right? But you don't know when that day is gonna be. When you get to a particular goal and a particular level, you know, cut it, call it a day, bank it, and then come back and go back to those simple strategies that's gonna get you to be more consistent over a longer period of time. You don't have to be 100%. You just need to be able to say, in the last 10 trades, nine of those trades I lost, but the 10th trade was large enough to be profitable over the previous nine. The logic sounds ridiculous, right? But if you have 10 trades and then you lose $10, nine trades, you're down $90. You go in for the 10th trade and you make $1,000. You're up nine. Everybody do the math at home. Everybody do the math. Everybody do the math at home. You're up $910, right? Nobody would be upset about that. Nobody would be upset about that. Now, today I came into the market with very struggling uh with a particular level of confidence because I like to be right. I like to be right. And today it was kind of a struggle to put on a trade and acknowledge my my imperfection again, right? To see it in that mirror again. But it's all good. Enjoy your weekend. I went on and I rambled just for a little bit while longer. Um, hey, look who it is. Hey, look who it is. Look who it is. Let's see if the audio's on. Okay. Right. Let's see if this let's see if this camera's still tripping. Yeah. Yeah, I need to get a new lens. It's tripping out on me. Yeah, it's tripping out on me. Okay. Ooh. Have a good weekend.